everyone. Pop quiz. When do you start the year-end close process if you are trying to get your 2025 records to your CPA? So 2025, do you start it on January 1st, 2025? Or do you start it on January 1st, 2026? Well, conventional wisdom is that you start thinking about and dealing with that January 1st, 2026. That is completely wrong answer. It's January 1st, 2025. Yeah, on the very first day of the year, you are starting your tax planning and tax prep. Now, what does that mean? Well, we want your bookkeeper to create a folder called Year-End 2025, and they're going to start collecting up documents. So what kind of documents are we talking about? Well, if you buy a new big piece of equipment or a new vehicle for the company, we want the purchase documents scanned and put in that folder because the CPA is going to need that information. The next thing is something that can really get you in trouble. And that is your payroll records, your quarterly reports. I have seen more than once situations where people switch payroll service providers during the year, and the bookkeeper, whoever was in charge of payroll processing, never downloaded the quarterly reports because it's in the software. Why do I have to download it? It's in the software. Well, if you're using QuickBooks Desktop, the forms, those payroll forms, they don't go along for the ride when you send a backup to your CPA. They're actually a separate folder. And so your CPA is not going to have it if you're using QuickBooks Desktop. If you're using QuickBooks Online, they would have access to it, but you're seriously going to make the CPA staff, who charges a lot more per hour than your bookkeeper, you're going to actually force them to sit and click and download? No, terrible idea. So please, bookkeepers and business owners, hear me now. Every single quarter, when you know that the quarterly reports are done, this is like Form 941 for the federal government, download them and put them in your year-end folder in a subfolder called payroll. Do it every quarter. Then no one has to sit and click and click and click, downloading them all. And the reason why this is so important, and this is what I've seen happen more than once, is you switch payroll service providers mid-year, nobody downloaded the records, and so when it comes to tax prep, and you get the list of documents your CPA wants, it lists those quarterly reports. Well, you don't have access to the old software. You can't get Q1 and Q2. Like you log in and it's like blank screen, like no access. And so you're missing 2 quarters of payroll records. That's not good. And especially if you switch payroll processors mid-year, somebody has to do what's called a payroll tie-out, where you compare your quarterly reports to your W-2 and W-3, and they have to match. If they don't match, you're going to end up getting a letter from Social Security. So somebody, a human, needs to be in charge of records collection. And the 2 biggest things for prepping for year end are those big ticket purchases, save those records, and your quarterly payroll records. The other thing that starts January 1st, ideally, is that your bookkeeping is up to date and accurate on a monthly basis. And so we're not waiting 3 or 4 months to do our bookkeeping, dear self-employed micro business owners who do their own bookkeeping. We need to make sure every month your bookkeeping is accurate. And there's lots of good reasons for this. Number one, your financial statements tell you the story of your business in numbers. And it's important for business owners to understand how to read financial statements. And it's important that they're accurate. And I would hope that a business owner could look at the financials and say something doesn't look right? You don't need to know how to fix the problem, but you should be able to highlight it. For example, I had a client who I saw their financials and I was like, wow, it looks like you made a lot of money last year. Is that correct? Oh, yeah, that's correct. And they had done their own taxes with TurboTax. They were doing their own bookkeeping. And then when we dug into their books, we discovered that all their income was doubled because they attached their bank feed and they attached Squarespace. So their income was coming in two different ways and getting doubled up. And this is also a chronic problem we have. I know the commercials tell you that bookkeeping is automated and all you have to do is turn on your bank feed and walk away. I know the commercials tell you that anybody can do bookkeeping. The commercials lie. And business owners find out sooner or later that that story of how automation can replace a bookkeeper and everything is easy, it's just not true. And that's one of the problems we have right now, is that so many people believe that you can sit anybody down in the bookkeeper seat and they can do bookkeeping. Well, most anybody could do data entry, but that doesn't mean they know how to do bookkeeping. And bookkeepers have been so minimized in the business world. It's kind of an afterthought. People think anybody can do it. There's no reason to, invest any money in training. It's a real mess, folks. And we need our bookkeepers to feel confident so that you can ask them questions and feel like you can get answers. If you have a bookkeeper who every time you ask a question, they get very defensive, it's a sign that they probably know that they don't completely know what they're doing. And it's not their fault. It's because bookkeeping has been so minimized that there's no professional development, there's a lack of mentoring. And if you were in a position where you were doing something and you knew that you didn't completely know how to do it, you'd probably get defensive too if people ask questions. But the other side of that is, business owners, you have to be able to ask questions and get the answer. You don't want to ask a question in a meeting and then never follow up because you're busy. Then the bookkeeper knows you're not really paying attention to the bookkeeping, and that's where things like embezzlement can occur. So for year-end close prep, we need our bookkeepers and the business owners to know that preparation starts on the first day of the year that the tax return is going to be for. All right? There's a final set of documents that you need to collect for year-end close. And that includes the adjusting journal entries that your CPA had to do for your books to be prepared for taxes. Now, it is very normal to have, between 2 and 4 adjusting journal entries. That's the transactions that the CPA creates for things like depreciation. And they might be moving owner distributions into retained earnings. We'll talk about that later if you don't understand what those words even mean. So I would like you all to make sure that your bookkeeper gets the list of adjusting journal entries that the CPA had to do to be able to do the taxes, and the depreciation schedule. Now, not all CPAs deliver that, so you might have to ask for it. The depreciation schedule shows all of the assets that you have per your taxes. And we want the bookkeeper to have that list and have it in the year-end close folder, because as you sell assets or dispose of them, we need to write them off. And your CPA can do that for you as long as you tell them. So I like to have a PDF of the depreciation schedule, and then as my coworkers tell me that an asset was sold, I can cross it off the list and write a little note that was sold and what date. So depreciation schedule is the next document that we should collect. And then the final one, there's a document that's called a trial balance report, adjusted trial balance. It shows the balances of all of your accounts per the CPA. Now, That document or penned up financials. Some CPAs will send the financial statements with their notes of what they changed and math at the bottom. And they might even write, for tax purposes only, because they don't want it to, CPAs have laws that they have to abide by. And so some CPAs are really uncomfortable providing you financial statements because they don't want it to appear that they're audited financials. So either the trial balance report or penned up financials are really helpful for you to have. They represent the numbers for, let's say, 2025. They represent the final numbers for 2025. And your records should exactly match theirs. So your totals should match up. And the reason why we ask for this document is so that somebody, hopefully, can go through and double check that 2025 looks like it did when the CPA got the information. And if it doesn't match up, somebody changed the past. Now, if you have that closing date set, then people shouldn't be changing the past. But if your bookkeeper knows the password, or if the business owner knows the password, they might change something anyway. And we'll talk more about the problems with changing the past in a later video. But the focus right now is that prep work. Prep work begins on the very first day of the year that the tax return is going to be for. You want to be collecting up documents and saving them along the way. Do not wait for January or February to download all your quarterly reports. For payroll, get them as you go. And to close the loop on tax season, you also want to get the documentation from your CPA. Now, the adjusting journal entry report, I said 2 to 4 entries. If you have more than that, it's probably a sign that something in your bookkeeping is incorrect, okay? So looking through those journal entries, you, the business owner, should look at those journal entries and look at how many there are. And if you have 2 pages of journal entries, that means your bookkeeping is not being done correctly. And somebody needs to fix the problem. And that usually means cleaning up the books and training the bookkeeper on how to keep the books clean. All right. Now, there's one more thing I want to tell you about prep work, and this is hugely important. Before business owners, before you send off financial statements for your CPA, because I know, around October, November, they're going to reach out. They're going to say, send me a balance sheet and a P&L. You must first ask your bookkeeper how much of the year is reconciled. Reconciling, which we'll talk about in more detail in the next video, but reconciling is the process of looking at third-party documentation, like your bank statement, and comparing it to your accounting system and making sure they match. All right. I've even had this happen, personally. We were doing the bookkeeping for a client. We were sending them monthly reports. So we were sending them year-to-date balance sheet and profit and loss every month after we did the bookkeeping. Instead of sending our last packet to the CPA, they went into QuickBooks Online and they pulled their own reports. And they pulled them, let's say, through November 10th. Well, we weren't done with October yet, and we certainly didn't have November entered because we were doing after the fact bookkeeping, meaning that they send us all the stuff after the month is closed, and then we get the books taken care of by, say, the 15th of the month. So they just sent their CPA a month and a half of garbage. Like if there's anything in there, it's not complete, right? And sometimes there's automation where there's automated entries that get added as you go, and those are in the system, but everything looks really crazy. And the CPA freaks out and says your books are a complete mess. And the owner freaks out and goes back to, let's say, us and says, my books are a mess. They're not a mess. You just sent the wrong reports. So don't just grab reports, don't be in a panic rush. A lot of business owners, when it comes to tax season, they're in a panic rush. Like that's just their MO because they're scared to death they're going to get that huge tax bill. Slow down, take a breath, check in with your bookkeeper, maybe even have them run the reports and make sure they're only running the reports for the time frames that have been reconciled. And reconciling is going to be our next video.